It's MrConectr. Welcome. Let's get to the today's market intelligence report. We are in the midst of the Great Awakening and the financial revolution. So let's stay up to date so we'll all be in the know. And we're doing that by getting our AI agent to go out and get all the headlines every morning so I can go through them, give you guys the headlines, keep you guys up to date with MrConectr on the market intel report. Let's get going. The Hormuz talks advance, but Iran says the deal will still not reopen the strait on its own. What it was Oman called weekend talks positive on the possible Iran-Oman shipping route framework. And Iran's foreign minister said discussions were still in late stages, but stressed any framework would still leave the full reopening subject to other conditions, including U.S. compensation claims tied to the failed June MOU. So Iran's wanting a little more. So they are working it out still. Let's keep our eyes on that. That's the macro tape event that's holding everything up really right now, it seems like. Security leadership publicly listed demands such as lifting the U.S. Navy blockade, sanctions relief, regional force posture changes, and frozen asset movement. You guys know I was talking about Iran. That's kind of the money changer of the world. That's like, they have all these sanctions on them. So, and all the other countries. So there's a lot going on with Iran that we don't know about as far as the money laundering. And that's kind of the in and out route for all these other countries and organizations that have sanctions. They can still go into that country and process their transactions, outside of this SWIFT system. So they've been doing that for a while. So I think that has a lot to do with at the same time we're working on crypto legislations. I think the finances, we don't get every story in the news, of course, but I believe that Iran's finances and the sanctions, they're all working that out. That's a huge part that they don't talk about, that as far as them being the place to go to move money in the world. I think that Trump's probably trying to clean that up. So we shall see. We got to get this right before we get this blockchain financial system implemented, right? Abu Dhabi's reported that one of its vessels had a missile strike on it Saturday with no injuries, though. We got separate Houthi claims of a strike on the Saudi Aramco facility in the Red Sea was attacked. U.S. messaging was split between could be soon and still middle of the game. Yeah, we heard J.D. Vance say we're still in the middle of this war. So we are in it. Explanation is progress language without a shipping restart keeps the energy risk premium alive. And that is still the main macro override on the inflation optics and risk assets volatility into the week. Of course, we got oil down just a little bit at 78 on the WTI and 83.55 on the Brent. We've got soft U.S. labor last week lowered near-term hike odds. So the labor affects the hike odds for the Fed. And unfinished Hormuz keeps the floor under oil and a ceiling on how clean the soft landing tape can get for this. Okay, let's get to the general crypto market. We're sitting at $2.17 trillion for the total market cap. And today's heat map, Bitcoin down 1.4%. I thought we would get a little price action this morning, but unfortunately, no. We've got the ETFs, though. Last week were all green for Bitcoin. What have I got here? Coin Glass. Let's read about these ETFs. Before we get to the ETFs, though, I want to talk about the BIP 110. The Ethereum, that's the Bitcoin soft fork that happened. Okay. I don't know much about it. I hadn't been into a Bitcoin in a while, but let's just read the tape, see what it says. We've got the BIP 110 entered mandatory signaling at Bitcoin block 961,632 Saturday. So only 51 of the prior 2016 blocks, about 2.53%, signal support for the chain. The enforcing minority branch produced 2 blocks linked to a small ocean datum cohort branded Roughnecks, then stalled around 961,000 while the economic chain advanced towards the 720 plus thousand zone. Gap widened to 80 to 90 blocks. Mandatory signaling window runs through block 9,63647. Enforcing nodes reject non-signaling blocks. Ordinary nodes still accept both. So you've got a fight between which nodes are wanting to keep the old chain going and which ones keep the new chain going. Which one's going to prevail? I've always thought that was kind of interesting in Bitcoin, that you could do this. Explanation. This is fork theater with scant hash power, not market structure rewrite. Custody hygiene still matters if anyone tries to trade with minority coins. So the minority coins will be the new one. And custody hygiene. The economic chain is one with hash and liquidity. So yeah, the resulting chain, so whichever coin has the hash rate and the liquidity will be the prevailing coin. I'm not exactly sure. Bitcoin, I know Bitcoin Cash had the opportunity to overtake Bitcoin and become the new Bitcoin, but it did not. It became its own chain. So, and then they say this is actually a soft fork, but to me that means there's not a new coin. I'm not sure exactly what's going on with this, but I try to bring it to you the best that I can. It's a little confusing and out of my wheelhouse, keeping up with the Bitcoin forks. Sounds like it's not really, I don't know why it's so necessary to fork it. I did see a while back in BlackRock's investment, what is it called? When you get your information when you invest in a certain product, that they had to let their customers know that Bitcoin could fork into another chain. And so I don't know, this is kind of weird. We have to keep our eyes on this. So I mean, BlackRock was covering themselves talking about the fork. Everybody's always worried about covering themselves and the liabilities. So but the threat is real with this. I mean, but think about it, even if it does split into another coin, you're going to have 2 sets of coins. You're not going to lose anything. So I'm not really sure what the point of this is. And I apologize for not knowing more about this. But we will keep our eyes on it. But like I said, Conectr's not too interested in what's going on with Bitcoin. It is the OG. It paved the way, but it is old tech as far as I know. Now, that does not to say that it can't be a store of value like they claim, But let's get to traditional finance and crypto convergence. Details. We've got 1.1 billion spot combined Bitcoin and Ethereum primary market intake was IBIT heavy on the Bitcoin side. So for the ETFs, and still broad enough that Ethereum products printed their own best week since April as well. Narrative linkage to the cold card exploit was plausible for the Bitcoin wrappers and incomplete for the ETH inflows. Brand treasury, digital asset treasury unwind from earlier in the week. Trump Media Crypto.com Crow vehicle termination remains the opposite pole of the same convergence story. We've got serious capital choosing regulated wrappers and cash flow rails over leveraged treasury theater. Yes, we saw a huge influx last week into the ETFs for safety. There was a big flight. I think every day was a green day for Bitcoin and Ethereum as well. The most volume since April, I think it said. And lots safer to be in an ETF. So they're pushing everybody out of these on-chain activities, but that's going to be where we make our yield, I think, since the government the banks don't want us earning yield on our deposits. This is our venue to stay educated and on self-custody and to stay in this new system and not get out of it like they just force people to. Now, I'm not saying they're behind this cold card hack. Who knows what's going on with that? But the timing of it is a little suspicious, forcing everyone into the ETFs, into centralized control. Pretty tough decision to make, but Conectr staying on chain, in the new system. I'm not ready to step back yet into the old system. So that's exactly what that is. And a lot of people don't think about it like that, new versus old. They just think it's an updated old system. But we know there's more opportunities for us now than ever before. And that's what it's all about. Let's keep going. Robinhood chain leans Ethereum gas and tokenized stocks. There's no native coin, though. So they're using Ethereum gas fees for their tokenized stocks. Details: Robinhood's July launched L2 Arbitrum stack uses Ethereum for gas and is positioned around tokenized real-world assets and stock tokens. Leadership commentary again framed two wolves product tension: meme retail versus serious retail, while secondary analysis argued proprietary RH token, like a Robinhood token, is unlikely, while Ethereum remains the fee asset, base style architecture. This is broker-built chains that settle fees in Ethereum, and they have quiet confirmation that convergence is product plumbing, not another exchange token cycle. So yeah, we saw the big bump in Binance exchange token. I was kind of forced to get out of that back when they limited U.S. customers. They restricted us out of Binance. So I had some Binance coin before it took off, but government restricted us. So what am I to do with these coins? Hold on to them and do nothing with them until the government lets us back on the platform again, which I have heard recent rumors about us getting back on Binance, but I had to sell those Binance token and I missed out on all those gains. There's a lot of market manipulation going on through regulation, and that is a fact in this entire space here. Regulatory developments. September closure calendared. Cross-border friction rising. Impact very high. The Clarity Act cloture vote locked for Tuesday, 15th of September. So my tape said that they did closure on Saturday morning, but it looks like they only marked up closure. So that's the beginnings of the vote, the first step. Details: early Saturday, here we go. Minority Leader Thune filed closure. So he just filed for it on the motion to proceed to HR 3633, Digital Asset Market Clarity Act, after an overnight secession as the Senate left for the August recess. The agreed calendar: cloture vote at 2:15 p.m. We've got our date right here. 2:15 p.m. Tuesday, September 15th is our closure vote for the Digital Asset Market Clarity Act, the day after they return. So they'll have one working day and then they'll start on it. I guess they're coming back the 14th, and then they will begin on the 15th of September. Invoking closure needs 60 votes and only advances the motion to proceed. It does not pass the bill, of course. With 53 Republicans, about 7 Democratic or independent votes are required if the GOP stays unified. 7 is what we need. If all the Republicans vote, we still need 7. How does that make sense? I thought the Republicans had the majority. Who knows? Open flight remain on ethics language, illicit finance. So they're still fighting on that. Ethics, illicit finance, law enforcement, text, and how Senate Agriculture Committee language is folded. Prediction market says yes on the 2026 enactment, still about 20.5 cents. Last week it was 11 cents. So they've gotten more expensive to purchase a yes prediction vote, right? Explanation, August 4 window is gone, but the bill now has a real September procedural clock instead of rumor. Calendar does not equal consensus. Okay, more regulatory developments. Brazil sets 2027 transfer hold regime for large crypto outflows. Brazil's central bank will require VASPs to place precautionary holds of up to 24 hours on transfers above $10,000. So yeah, you thought you were moving into the new lightning speed rails where you could go and pay for a car, a $20,000 car in seconds. But no, Brazil wants to hold 24 hours on your transfer above $10,000. Wow. They cannot let the people breathe at all, can they? 10,000, that's not really much when you go to do something big. You know, you want to go take care of some big business. $10,000, you got to wait 24 hours. They don't trust you with that money. They don't trust you with your own money, guys, and moving it around. How totalitarian is that? Customer notice and fraud record keeping required starting January the 1st, 2027. Maybe this stuff will, they're going to implement these extra guardrails on top of it to actually suppress how crypto actually works and is meant to work. And maybe in the future they'll start relaxing some of this, especially when you can police the rails at a more efficient rate. Okay, we've got DeFi and tokenization. Industry shakeout, 100 plus projects. Dark, while fee real names endure. Fee real, FEEREAL, fee real names. It's a weird way to put that. Details. Industry tallies put 100 plus crypto projects shut, bankrupt, or permanently dark in 2026. With late July clusterings across exchanges, wallets, DeFi, NFT venues, and even a Polkadot parachain. The exploits losses cited above 1.1 billion in the first half of 2026 is the same roundup. Survivors called out for actual fee to cash flow models rather than token emissions treasuries. Explanation, this is a selection event, not a sector death. The RWA, stablecoin float, and fee positive DeFi keep the institutional path. Zombies contracts are the hangover. Wow. It is tough to stay alive in this space, especially in a down market. Tokenized broker RWA surface keeps expanding at the edges. We've got Robinhood's chain, stock token, RWA framing, and prior week XRPL confidential transfer work for multi-purpose token assets remain the constructive infrastructure line, even on quiet Sunday RWA headlines day. Classic DEX turnover stories were thin versus product architecture news. Explanation, convergence is still issuance. Compliance and distribution, not another pure DEX volume spike. All right, let's get to our AI and blockchain news. AI-assisted vulnerability hunting becomes an ops reality. Details. Bitcoin Red's team AI-assisted scan narrative. They scanned 150 repos plus dozen plus disclosures, open source automation roadmap, and landed beside active exploit aftermaths in a Bitcoin self-custody and Lightning stacks. Separately, a small Israeli security firm, Irregular, was linked to a mainstream coverage to rogue AI attack research touching major model labs. AI shortens to exploit cycle. Patch velocity and dependency hygiene are now alpha for any Rails operator, not optional research. Patch velocity and dependency hygiene. We've got compute build out keeps colliding with power and emissions politics. Details coverage of Amazon's West Texas data center power plant path framed a potential top-tier U.S. single-site emissions source. Parallel crypto adjacent pivots miners to AI infrastructure financing. Keep the hash to compute capital rotation alive. This is local open agent stacks and energy-aware stay strategically relevant while hyperscale AI centralizes power demands. Wow, lots going on in the AI space. Prediction markets. Trying to get through this quick today, guys. Got a lot to do today. Clarity Act 2026 enactment still priced near 1 in 5. Polymarket event Clarity Act. Like I said earlier, is at 20.5 cents for the yes, 79.5 cents for the no. That sits under a real 15 September closure calendar, but still prices process friction. You know, we still have the ethics and the illicit finance tax and the 60 vote math that's still keeping the no's prices high for this 2026 to pass. We've got scheduled procedural vote is not signed law. It uses market as skepticism check on hopium timelines, not a substitute for whip counts. So yeah, if you really think that it's going to pass this year, you can go buy yes votes for 20.5 cents each, or if you don't think it'll pass, you can buy a no vote for 79.5 each. Risk and opportunity analysis. We've got risk score overall 6 out of 10, a little elevated, and an opportunity score 7 out of 10, constructive. Keep your eyes on the risks. This is the Hormuz oil premium, the ETF street test on Monday. We have 5 green sessions. Today's incomplete, of course. Red open week would flip the narrative fast. So if we get a red inflow today, that's 6 straight inflows. But that's not really, to me, that's not really a market changing thing. That's just moving money out of self-custody. People are still hearing about this cold card and still moving their funds without even knowing what exactly happened, and that it was the company's fault for not weed. Yeah, company's fault for the weed. No, they were developing weak seed phrases, and still gotta trust that these companies are developing the correct algorithms for the correct seed phrases. Digital asset treasury sales and brand token politics. Strategies Bitcoin sell is orderly, worldwide funding optics are not. Both can hit settlement without killing Rails demand. We've got exchange, DeFi, security tax, coins by $8 million drain and a hyperliquid take rate. Erosion show ops and mechanism design remain those risks remain live. Also the clarity closure math, 60 votes plus ethics fights, we've covered that. Opportunities. What are our opportunities? Of course, keep your eye on the Ethereum spot as well, the ETF spot, bank grade Rails condition, stand charts, tokenization / chain links owning the Rails node is a clean infrastructure signal. Broker distribution, Robinhood UK crypto in main app via Bitstamps, via using Bitstamp. This expands regulated access service. Broker distribution. That's right. I forgot about Robinhood. using Bitstamp, expanding their regulated access. Open weight AI, Meta's laptop class open models reinforce local sovereign compute narratives next to payment rails. And volatility compression. Tight weekend ranges and softer liquidations create cleaner levels that the macro does not shock. Okay, AI recommendations. Short-term, mid-term, long-term. Short-term, watch the Monday through Friday ETF session this week. Track Hormuz. Mid-term, favor regulated distribution and stablecoin payments. M&A over brand digital asset treasury leverage. The Robinhood, Bitstamp, and BVNK MasterCard path. Political token rises. And also the MAP tokenization plumbing names is research, not lottery tickets. Banknotes on oracles, interoperability matter more than single token targets. Expect AI oversight hearings noise while open weights ship. Dual track into autumn. Long term, 6 to 12 months out, rails and sovereignty compound. Tokenized RWA forecast. Open weight, local AI, and cross-border compliance UX are the multi-year stack. Security and feed design separate survivors. Exchanges make users whole, and the venues that retain offshore and wrapper channels keep carrying share. And high risk and structural, we've got geopolitical shipping shocks can reprice oil. Inflation expectations and crypto beta within a session. Spot ETF flows reverse. This is the risks to watch out for. 5-day green stacks. Streaks are not guarantees, especially when, like I've been saying, they've been forced into this. Basically, people that are unaware of cold storage protocols are forced into these ETFs. That doesn't signal market need at all. That just signals a shift in habits. Corporate Bitcoin treasury sales and preferred common equity programs can hit sentiment independently of ETF demand. Smart contract exchange withdrawal and cross-chain bridge exploits remain frequent and costly. Be careful out there with those cross-chain bridges. They're still working that out, guys. And they're trying, we've seen a couple projects tout their smart contract free bridges where they don't depend on smart contracts, because smart contracts have several vulnerabilities. They really have to be audited and be perfect to use that. And that also reminds me of the chain link. They have to predict the fees. If you're going to cross chain, send from using the chain link service, you have to prepay gas fees on the source chain before you can get to the destination chain. Oh wow, that's still a lot to figure out and work out. Chainlink had a big depeg on a random stable coin that was in their system. Not even their chain. They just use the interchain linkage. But if there's been a problem with the pricing, that the pricing is huge. Not a lot of people pay attention to how important correct prices are. That's why Flare has mainly got into it, because you can't have all this DeFi locked up assets under management on all these chains depending on a few centralized pricing oracles. So that is the beauty and the need of the Flare protocol, which I've always loved them. I think that about does it. This has been your financial market intelligence report for August the 9th and 10th. I've got a lot to get to today. This has not been financial advice. Sorry if it was a little fast, and I'm kind of getting used to my show still, but and I'll get back live one of these days again. And I hope you guys have a great week, and stay strong, stay patient, and stay wise. MrConectr out. Peace, guys.